Morning, good morning, good morning, Stocktwits Nation. It is Monday, April 7th. There's really nothing going on today. I don't even know why we're here having this show. I hope everyone had a good weekend. Obviously, there is a lot going on in the market, and we had big weekends over here. I read a couple books. I went for some runs. Shy was quote tweeted by Bill Ackman, which I want to start off with. But looking at real quick, let's get a pulse check of what we're looking at in the futures. Dow's down about 800 points, S&P about 100 points, NASDAQ down about 400 points. Things were a lot bloodier last night. They got a little better in the morning, and then we had a Truth Social post that indicated some more doubling down behavior. And this is where we're at right now. And usually Shy and I have a bit of a schedule lined up, but we're gonna riff. I feel like every 5 minutes something's happening. But Shy, let's kick off with what you did this weekend. You wrote something. Tell us about it, and tell us why you wrote it, what you were feeling when you wrote it, and then what happened next.
Yeah, absolutely. So I had a lot of frustration this week. I am a long-term investor. You guys all know this. I think we're really early in the fourth industrial revolution. I position my portfolio to capitalize on what I think will be the hot pockets of this agentic AI world we're about to enter. I feel like innovation or the future the can got kicked down the road with Liberation Day. And the reason I was just so frustrated was all the pain we've experienced the past couple of trading days or just the past week, like QQQ being down like 15% in 1 week, it could have been avoided if it was avoided completely. It was one individual who drove that. And I know it's like, I'm sure there's other people in Trump's circle. It's not just Trump, but I think we, everyone who believed in a Trump-led presidency felt not violated, but just completely disregarded. Like I, myself included, like I wanted a reset. I wanted a detox. Like I wanted U.S. to stop being the rich guy at the table to pick up the check. Like I wanted some of the people who are paying for the food to also start chipping in. And the way that things were going on a global trade policy was unsustainable. Like we could not keep pretending that a consumption-led economy could be held by 0% interest rates and like there's a fragility to the supply chain on the global scale that needs a long-term solution in, and I think there needed to be a rebalancing that occurred. However, like what we got wasn't a detox on Liberation Day. It was a complete whiplash. It was a complete. It was he became an agent of chaos, and you don't want someone in the position of POTUS, the power that POTUS has, to be that agent of chaos. And the reason I think I'm saying chaos, such an aggressive term, is there was no strategy on what was implemented on Liberation Day. It felt very peanut butter spready, where that's a term we use in the FP&A world, where you just maybe don't have the bandwidth to put in the time to figure out every line item, what number makes sense on the tariffs, what number makes sense on like any kind of specific rate for that country. They decided to go on ChatGPT, create a new calculus to come up with these rates, and just use that same methodology across the board. That is so lazy and it's so scary that that's the methodology they use. Where yes, the government is in a way an entity in itself. However, it's the engine for the global supply chain, global economy. It's the engine behind it. So if you're going to use some half-ass methodology using ChatGPT to help you with it, it's going to affect so many different countries out there. And I'm looking at my post right now as well. Well, yeah, one of the things I really wanted to focus on was China, obviously, because like that deep sea playbook reveal, I think highlighted more of like what's been the status quo from the East, which was stealing American IP. And I think that maybe I wanted a more harsh stance on the East in this Liberation Day. Like make it explicit: if you don't comply, we're going to make Taiwanese independent. We're going to bring the whole entire global semiconductor industry economy with us. No half threats, and just be very serious about it, because I do believe China is at war with us, and our policy should reflect that. But no, like they went across so many poor countries that just didn't really need to have their tariffs raised on. And they also went after the EU, and not just the EU, like specifically like the auto tariffs, which I think would have been fair in the EU, but they went across everything, like the goods and services included. And if you guys don't know, like we have a massive surplus on services with the EU. Like it's huge. Like that's our bread and butter. We just put a tariff on that. And that's going to affect a lot of the American AI initiatives like the enterprise software, the LLMs, the cloud, defense, the new age defense. Like it's going to affect all the tech in America that really didn't need to get disrupted because we were actually on the right side of that EU and US trade alignments. So now I'm like, all right, well, you just put tariffs on outside the autos. It's like shooting your own foot just called balance. Like it doesn't make sense. And we're not at a trade war with Europe. So like in order to defeat your enemies, you don't also punish your allies. Like it does not make sense. And he's doing it all at once. It feels like it's brute force. It feels like he's trying to break something that really didn't need to be broken at that wide of a scale. And it could have been played out strategically, but it felt like he wanted to go take a nap or something. And he wanted to do it all at once, or
He
he
had to
wanted to
go.
go play
He
video.
went golfing. He won though.
Yeah,
He wanted everyone to know
yeah.
that.
He was like
Yeah.
he didn't want it like
Yeah.
not stagnating, but like he didn't want it playing out for the next like year, 18 months. He wanted to get it all over with at once, like he's an impatient toddler. That
Yeah.
doesn't. That's weird. Something's up with that. I don't know.
Let's pull up. So Axios had a good like breakdown of this formula. It's getting like bad flashbacks to high school math. But to your point, we don't know where it came from. We don't know the origin. A lot to your point, Shy. A lot of people are like, someone GPT'd this. A lot of it just doesn't make sense. I'm not a mathematician, but a lot of mathematicians have looked at it. This is actually a criticism from a conservative think tank that looked at it and was like, what the hell is this? And I think my question to you, Shai, is like, is this laziness, this kind of broad base, hey, let's make one calculation, they're never going to know, apply it and say, oh, that's the rule? Or is it incompetence, something else? Because there's just so many eyeballs on it now, and there's so much scrutiny on everything. It's wild that they thought they would like get away with something that just didn't hold up to like the basic tenets of mathematics. That's where I'm just like, what is happening right now? And I think that's why a lot of it's like volatile. It's not just that this person's using brute force, it's that the behavior is very erratic and no one knows what could happen next.
No, I mean this happens a lot in my corporate strategy career, or has happened a lot. Not anymore as much. I get an initiative from an executive. I'm like, this doesn't make sense. Like, how do you want me to get from point A to point B? Essentially, read between the lines, goal seek that motherfucker. Like,
Mm-hmm.
just goal seeker. That's exactly
Yep.
what happened. I think for in like, Trump's like, I want these tariffs to be disruptive and bloody. I want China to be above 50%. I want Taiwanese to be 40%. I want EU to be in the 20s. And they're like, how do we get there? What's the methodology? Because that's significantly higher than what you just said you want to do, calling it half of what they're charging us already. They goal seeked it by going on GBT and figuring out like these are all the data we have, like what's some narrative or manipulation we can communicate to get to the numbers that Trump wanted to goal seek. That's exactly what happened. It's a status. Again, he's from the corporate world, Trump, so he knows kind of the goal seek environments.
Yeah.
So he just wanted to get there, and obviously, it's never been done at this kind of scale before, and that's what's so alarming because everything's data dependent. The Federal Reserve is completely data dependent. Everything from the government should be data dependent. This was not data dependent. This was data manipulation, and that's the worry.
Yeah. And I think you're seeing I think a lot of the commentary today is there has been more dissent. I want to go back to Bill Ackman, who decided to start talking on his own after he engaged with your post, Shy. So he came out Sunday and basically came at Lutnick, broke his silence. And then I think about an hour ago, he sort of walked it back. So someone yelled at him. But you also have people like Don Bacon, who's a Republican congressman from Nebraska. He's calling for Congress to start to put some more parameters around these tariffs. I think something really interesting is that the genesis of all of these conversations was rooted in fentanyl. and national security, which is why he had so much flexibility to do these things. I haven't heard the word fentanyl in quite some time. And so I think you're going to get to a point where the pressure could be mounting. I want to talk about Ackman, but then I want to also get to people like Elon Musk, who have spin crickets, hasn't really said anything, and then kind of came at Navarro. But let's talk about Ackman. Your post, Shy, Bill Ackman. How soon after did he quote tweet you and basically agree with everything you were saying?
Over a day. It was like I posted that Saturday morning. I think he did it Sunday afternoon. But
Okay.
I think Bill Ackman, no, he's not a CEO, but he really is a CEO. He um he has a holding company, and I think he invests in a lot of, he interacts with a lot of CEOs because that's he has his portfolio, and he that's the access that he has. I think that's what the main frustration is on the street across the board. You're seeing tech Armageddon like phrased out. It's because it's true. Like if this lasts months, not weeks, we're in trouble. If this is still an issue by the time Q4 comes around, we're in a recession. It's a fact. We're going to be in a recession. And I think that's like what's the worry on here is because this would be the first main recession since 2022. I mean, not
Yeah.
2022, since World War II. And I think that capital right now isn't rushing to buy the dip. You're not seeing any V-shaped recovery. And there's like 15% dip right now in 3 trading days. You're not seeing any kind of dip buying. Why is that? It's because their cash is going to the silence right now. Everyone wants to preserve optionality. You still can get 4% in the money markets right now. So if you're have a 9-figure portfolio, are you going to really try to catch a falling knife when you've outperformed the past 2 years, or just wait it out, get that 4% until this high stakes poker game's over with and get some more clarity? Because
Yeah.
right now, no CEO can confidently model what their capex plan is going to be this year or next year.
Yeah.
No board is going to be able to greenlight any kind of growth initiatives, any kind of supply chain onshoring, which is what a lot of this Liberation Day is going to accelerate and cause, which nobody can really do. And the reason for all these things is you don't know if the tariff rates are going to double next quarter, next month. You don't. And the confidence in their formula and how they got to those numbers is at an all-time low, well deserved. So now you don't have any confidence or faith in the government to make the tariffs at the right balance. So that's an issue. And it wasn't a comprehensive renewable strategy. It clearly wasn't coordinated with the Fed. When you heard Powell speak last week, he was like, he's a great QAer. He was not on his game right now because I think he was also caught off guard. And you're seeing it clearly wasn't communicated clearly to the Treasury. And I just think that this is something that was dropped like a bomb and really was more designed to cause chaos and shock than to actually build America up again. And that sucks.
There is that iconic photo of Powell, and he's like leaning against a wall. And a lot of the commentary is like he's probably going nuts right now because he almost did it. Like he almost did the thing that no one thought he could do. He's been tinkering away, and this image, it's going to be in history books. He just looks like a defeated guy. But we're talking about buy the dip. I think you're right for the most part, Shy. But you know who is buying the dip to a higher degree are retail investors.
Hmm.
So retail investors put in $4.7 billion into stocks Thursday into Friday. So that was the largest level in the past decade. So I do think, and we talked about this a little on the show with Friday with Jordan. I do think there is a certain segment of investors who are like, this is my shot. I'm going to get in Amazon, Nvidia, and I'm going to get them dirt cheap and I'm just going to ride it. Do you kind of follow that same philosophy with some of your high conviction stocks, Shy?
100%. So again, I'm investing with it's all about time horizons. Mine's 5+ years out. When the VIX is at a 60, when the QQQ just hit a bear market from all-time highs to a bear market in 2 months, that's the time to really adding, accelerating your DCA plan. And I had a 15% cash position. Now I have a 5% cash position. I added significantly last night. I think this is a great time to start tinkering with your DCA plan and be aggressive with it. But there is a caveat, guys. Like, we're going to have a bounce. we're way oversold in the daily and weekly RSI. We are. There's so much FUD being priced into the market in today's reality with the VIX at 60. Again, VIX at a 60. COVID high when COVID got introduced was at 65 VIX. The uncarrier trade crisis 60. Both when they hit 60, they retrace significantly because the mean of it is 14 or 15. So that's why when people ask me, should I hedge, should I short now? Absolutely not. You're gonna lose money. I'm confident you're gonna lose money if you buy puts right now. You're going to lose money. So please don't do that. But I also think like we're gonna get a bounce, but I think we're gonna get a lower high and get a new low if this thing doesn't get resolved in the next couple weeks. And the reason for that is there's a boog. I made another post this weekend. There's a boogeyman coming in the next couple months, and the boogeyman hates guidance. That was what I phrased as. I don't think anyone's going to do guidance this upcoming earnings cycle. I think that's going to be the status quo. Everyone will remove guidance, and because of that, we have no visibility on what the future is going to look for a lot of these companies. That's going to pour fuel onto the fire of the noisiness that we're in. So I think we're stuck in mud. And I think there's no confidence that we're actually going to recover significantly. And I would get confident if we went above the 200-day moving averages, like I've been calling out. But even then, like what, we're at 411. Wow. We're 18% away from the 200-day moving average now. So
I'm glad you brought up earnings, Shy, because Friday we've got JP Morgan, who just upped their recession odds to 60%, I think this morning or last night. You got BlackRock, you got BNY, you got Morgan Stanley, Wells Fargo. You don't think any of these guys are going to issue guidance?
No.
Yeah.
I think maybe banks are different. Banks aren't in my lane, but anything with consumer exposure and tech, essentially tech,
Yeah.
no. And saving business spending exposure, like if you're, that's why I'm like, I wanted to add a lot of Snowflake under 120. I think software names with a consumption model are hit the hardest when things aren't going great.
Yeah.
They're not because the client, they make money on clients paying as they go, like as they use the data. So like if clients are freezing CapEx, freezing business spending because of everything that's happening, that's gonna kill consumption models like Snowflake. However, there is, I think, a defense layer of growth, and that's where I've been focusing this past week. There's a new age of defense, I always like to call it. We're not the Lockheed Martins, the Raytheons, like those are grandpa and grandma's favorite picks for defense. There's a new age of defense. It's the Axons, it's the Palantirs, the CrowdStrikes, Rubrics, Cloudflares. I've been adding to those names significantly because I think cybersecurity or security is going to be somewhat of a safe haven in growth because as IT budgets freeze, guess what doesn't freeze? Uh, the cybersecurity budget, part of the budget. That's
Yeah.
the stickiest component. What is this? Is it Dan
That's
Ives saying the same
exactly
thing?
what, yeah. So basically, Dan Ives said, echoing exactly what you're saying, Shy. He said
When did you
cybersecurity
post
names.
that? That's so funny.
I don't know.
I said that to my subs this morning.
Yeah. So you're saying it. I'm like, I feel like this is resonates. So he said cybersecurity names like Palo Alto Networks, Zscaler, CrowdStrike, CyberArk will be defensive names where investors could rotate from semis to software to hunker down during this Cat 5 storm and likely outperform other subsets of tech. So it sounds like you're in that camp too, Shy, because this is like how you talk all the time, and how you have been for weeks. I saw it. And I was like, oh, that. So he's talking about if you are looking for a pocket of a bright spot, that's where you're looking. And Shy, this sounds like exactly what you're preaching.
I love it. I mean, yeah. So you posted that 2 hours ago, which is funny, really funny. But yeah, I mean, cybersecurity is data is about to explode in the agentic AI future. What do you have to do with that data? You have to protect it, and nobody will cut costs on their defense budget, their IT budget. Nobody. That's not the lever you pull. It's the last lever, and by then, the world might be China might be invading Taiwan. That's the only reason you would do that. Which I don't even know if you would at that point. So I think, yeah, absolutely. So if you have, that's why CrowdStrike's reacting. Like CrowdStrike's still at 300, I think. Let me see. Like CrowdStrike, yeah, it's at 305. That's not cheap. Like to be honest, like CrowdStrike in this environment should be breaking 200. Like it's not. It's an expensive stock right now. But yeah, and Cloudflare is still at like $90. Like CrowdStrike is just like one of those names where pre-outage they were at 360, and now after everything that's happening, everything post outage and like the QQQ being down 25%, they're like 15% away from where they were at pre-outage. That's crazy to me. So I think maybe I was what I said wasn't such an alpha statement because Dan and I've said it and like seeing the price action here, but this is the time to kind of not minute when you get a macro driven pullback like this, like we've had right now, which is so rare, it's once every 5 years when the VIX is a 60, you reposition your portfolio. This is when you do it. You don't hold the laggers, the falling knives, or the rentals, like is what I like to call it. You add the permanent long term winners in early secular growth themes. And cybersecurity is one of my favorite themes. CrowdStrike's the tier one play, and I like the angles that Axon, Cloudflare, and Rubrik offering. And yeah, I love Dan Ives, so it makes me really happy that I said something very similar to him.
Yeah. And then, yeah, a lot of the commentary too, going back to the Wall Street, Main Street, Basent going on the circuit this weekend talking about, well, the top 10% of people with wealth own 90% of the stocks. So this is kind of giving the other side a fair shot. To me, that sounded like a very bizarre talking point to come from someone. That sounded like something Bernie Sanders would say, which was really interesting. But the counter to that, and I think we've talked about this stat before, is that same band of high earners do 50% of the consumer spending. And I think that's the part where you're like, that's where it starts. People stop shopping. They stop going to restaurants. And then you start to see people losing jobs. And this morning on CNBC, they actually have a council of CEOs that they survey during times of the market like this. And so they did a survey, I think it was last night, and one third of the CEOs that they surveyed said that if things held as they are right now, a third of them say they will cut jobs back this year. Seems very high given the uncertainty. Like you said, like everyone's kind of in wait and see, but they felt confident enough where we're at right now. We're like, yeah, if this holds, I'm going to have to cut jobs. And that's where you see the impact on everyday people. So I don't know if you saw that Bassett interview or heard that, but I think that's kind of the strange times we're in where you could take some of these sound bites and, I see some of you guys getting fired up in the comments, but it's kind of apolitical because if you disassociated the person or the party from the statement, it could be coming from anywhere.
No, first off, like I don't want this to be political. Like Katie and I, like we're not red, we're not blue. Like we're just saying logical statements. I think everyone agrees like the execution is absolutely poor. What happened last week, but regarding what you said with the CEOs, like yeah, first off, those conversations were already being had on this AI feature we're about to enter. Like, all right, well, we have a lot more tools of productivity available to us via AI. Do we really need a lot of these like middle management folks who are overpaid for what they do? They just manage people or products. Do we really need them, or can we like start dwindling down? So now, after last week, the bottom line just got squeezed even more. What are you gonna do? It's the straw that broke the camel's back on that conversation you already have. It's like, all right, this makes even more. This pushes us over the finish line now. We have the AI tools, and it fiscally doesn't make sense in this environment anymore. We kind of have a scapegoat now. We can blame the POTUS for why we're doing this. We don't look like the bad guys. That's going to happen. Like if this lasts months, this is going to be the great financial crisis. If this happens by the time the holidays are here and still this issue, this is going to be worse than GFC because GFC there was some predictability in GFC. Yes, you guys might not agree because like the real estate bubble just bursted, but there was somewhat predictable because it was so structural and you had that box that you can like play around that sandbox. There's no box. That's why people are spiraling because there can be reciprocations one after another after another. You don't know what the terminal range is going to be for these tariffs. And that's what's so scary. And people, psychology wise, enterprises and consumers, they overdo it to prepare for the worst. So the second guessing you're seeing right now, it's going to accelerate when things don't change. You're seeing this chaos turns into a reality. You're going to adjust, and consumers as well. Like for me, I bought a car this weekend for my fiance, and what did I do? I literally I front ran it because the tariffs might be going up in future, and I know that might be the opposite of what a lot of people are doing. Like they want to save money and stuff. Like I had to get a car. So I was like, I need to go get it right now. But after that, like, I don't know, like I'm gonna be cautious a little on like spending because like I need that dry powder on the sidelines. And for like a lot of America, you're there's you're barely breaking even every month. And now things are gonna get 15 to 20% more expensive across the board. Now you're gonna be losing money every month. So what are you gonna do? Like credit card debts are at an all-time high already. You're seeing delinquencies at an all-time high for the cars, like you mentioned to me before the show, Katie. Like it's a scary environment, and because there's no range of how bad it can get, like GFC, there was a range at least. Here we have none. That's why things are being so aggressive and sell off because people are preparing for the worst.
Yeah, and the psychology of it all is going to be fascinating to watch unfold because, of course, COVID was one thing. I think we were all very online during that, but that had this health component layer to it that had an existential crisis of life or death above the market, which kind of muddied things. If you go back to 2008, this is pre Facebook, pre all these things. The psychology of all this is fascinating. Even Saturday night, I was going to meet up with some friends. Usually we'll get dinner and then we'll go out after. And the conversation was like, hey, should we just eat at home and then get drinks so we can save money? Like that might not even be a mathematical thing with that group of people where they're like, oh, I really need to like not spend the $100, whatever it is. It's just this thing in your head where you're like, oh, maybe I shouldn't. And that compounds. Maybe I should get my coffee at home. Maybe I shouldn't buy and then if you think about that on like a national scale, it's wild to think about. I do want to go back to GFC real quick because one of the things that I am really curious what you think, Shy, is this, when in 2008, when all that went down, there were like these big moments where like it was like Jenga, like pieces came off and then things started to fall. That really hasn't happened yet. So like I'm curious what you think, if you have any like, ideas or opinions about what do you think that first thing's going to be. Someone talked about maybe a leveraged ETF going down. Yeah, what do you think is that big moment that's going to be that people are going to be like, oh shit, like it's happening.
Funds blowing up. So like during the 2022 bubble bursting, funds blew up, and you saw that in the volume of the sell off. So I don't think any fund has blown up yet right now. If that does happen, that's kind of where their volume of capitulation occurs. There's so many funds that blew up in 2022, like a lot, and that really caused a liquidity issue.
You're talking hedge
Uh,
funds?
Hedge funds, yeah, hedge
Yeah.
funds.
I saw
So
some, I mean, rumors, people talking about hedge funds getting, people getting called in the office all weekend. There's war rooms set up. Like things are getting a little
see,
dicey.
that's the precursor. Like if that actually comes to reality, you're gonna see much more blood. But to go
Yeah.
also off like you and your friends, like that's what I was referencing the second guessing. The psychological effect of all this has been had already. Even though the tariffs are gonna go implement next week or so, the psychological effect the past month, this week, the second guessing from CEOs and like your friends like consumers, the damage has been done already. That you'll see that impact right away.
Yeah. Even from your
So
your corporate strategy, I mean,
yeah,
you sit in this seat like the wartime CEO, you see the IPO market, all those companies we were just talking about that were going to go out. Oh, that sucks so bad. Think about being like an employee at one of those companies so long and you're like, it's happening. And it's like, nope. So like Chime, StubHub, Klarna, they're all hitting pause. M&A, all of that stuff. If things are shaky right now from like where you sit in your day job, Shy, that's just where everyone's just like time out. What are the other things that it's like time out? Is it like product development? Like do these companies go into complete defense mode in these moments until things sort of shake out?
yeah, hiring freezes. Hiring freezes are a real thing. It doesn't matter if you have job listings, you're not going to fulfill the FTE through the finish line because with the FTE, I'm assuming a lot of these FTEs are growth related. So with those positions, you're going to need working capital to back up hiring these FTEs. And right now, no CFO wants to stick out their neck on the CapEx plan like right now because it could be wasted capital. Doesn't matter if you install all these tools for your vision, if the goalpost keeps getting pushed back due to tariffs, like you're just wasting capital in the meantime when markets open. Wow. So yeah, I
Right.
think we're selling off big time right now.
Yeah.
Again.
Down over 1,000 in the Dow. S&P is down almost 3%. Nasdaq. Let's continue to monitor that, Shy. But that's, I mean, I think around 6 a.m. Eastern this morning, it was only down around 650, the Dow. So things are turning back to where they were yesterday.
Yeah, I mean, I think we're still not getting clarity here. That's like the biggest issue right now. There's no clarity on when this is gonna end. I think every person who's tried to done a PR stints to fix kind of this narrative issue has just been an absolute shit show.
Yeah, making
Um,
it worse.
they're
I
making it
think,
worse and just like highlighting
yeah,
nobody was on the same page.
it is the lack of clarity. Like I think a lot of the conversation too is now like we don't really understand what the administration's end goal is. Is it the fentanyl? Is it what are they looking for ultimately? Because there's a lot of messages out there right now, and one of the things that I think is confusing people is the reports that I think Vietnam, called them, and I think the response was like, "Yeah, we'll get back to you." It's like if the whole point was to incite negotiations, you would think that those negotiations would be invited. Although this all could be, one big gameplay, but it's crazy to watch unfold. In this day and age, we have we know everything that's happening at every given time. Everyone's commenting. You can see things in real time, and so things are stated, and you can watch those effects. It really messes with you as someone who watches this kind of thing.
Totally. I mean, we're in a mindfuck era. 100%. It's just like the whiplash, the back and forth. Like, you told me this, but you're doing this type of thing. And not having the Fed or Treasury like saying the same kind of message or confidence with POTUS. And you're seeing like a lot of people in this party as well. Like, it's just like, do you guys not have like a room you guys can go like catch up on and see what's happening? Like, is this not? It's like a CEO, CFO, and COO all say completely conflicting things on an earnings call. You're gonna be like, what's happening right now? Like, what? It doesn't make sense. You guys have these prep calls, or you guys have the material. You guys hopefully work together to have the narrative that you're gonna communicate, which I think is the normal case study where you saw in that group chat reveal from Vance, like they talk about what's the party narrative that they're gonna spiel out to the public, the rhetoric. There was no rhetoric this time, so that makes the fear of everyone is like, okay, so it looks like he's off the leash and doing something totally adjacent from everyone else, and that's scary because there is some kind of a risk. There's a risk to not
Yeah.
having a unified front on something that disruptive.
Then you got, well, yeah, I think the cracks forming add to the uncertainty. So there was the report that trickled out, I think it was Thursday, Friday, in Politico, which obviously was a leak. When someone wants something out, it gets out. And it was about how, Elon's tenure is going to be wrapping soon. There was some back and forth. Some people saying, well, he's actually limited how many days he could actually work for the federal government as a non-elected employee. So this was going to happen. The other people saying, like, he's getting so mad about his wealth. I think he lost $30 billion in the last few days, is what I heard.
That's
31
pretty
billion.
tough. Pretty tough.
And so, yeah, that'll ruin your Sunday. And he's been very quiet about things. I think he was posting about some social issues here and there. He hasn't really said much. And then now he's starting to like comment because Elon's kind of a loose cannon. He's kind of going
Totally.
at Navarro. He's kind of like, I wish likes were public right now. That's all I could think all weekend. I wish likes were still public on X. But he's commenting, and it's clear I think he did some Zoom thing. He's kind of like veering. You had Mitch McConnell come out and was like, this is crazy. You had Rand Paul. And so I feel like given the chaos, people feel empowered to push back. And that just leads even more to more uncertainty because at least before you knew everyone was going to fall in line. And now, who knows? So it's just it's a wild time to be in the markets. Let's check on what's trending. Oh, now we're down 1,200 points shy. So we're
Yeah,
down to
it's bleeding. I'm doing some adding though right now. That helps everyone.
I
I'm I'm giving the whole world confidence to buy this dip.
do it. Yeah, it's weird. I actually saw Mark Cuban posted something, and he was basically saying this is like an opportunity to whoever. And I don't know what happened there because then he deleted it. He was like, "Oh, actually, I shouldn't tell you guys what to do with your money." So that to me, I was like, "Whoa!" His lawyers were like, "Hey, man, like this could maybe, maybe you shouldn't do that." But I think it is like no one. We're at the point now where I think sometimes when these moments happen, you can tell when someone says something on the record that's going to get like played back. Now, this is very meta. Maybe this is going to get played back. But this morning on CNBC, Joe Kernan was like, you can't possibly take down an entire economy in 4 days. And I'm like, well, like now that you put
Watch
that
me.
out there, you're going to be in a highlight reel. So I think to Jordan's point last week, though, if you zoom out, yes, historically been here before. Historically, we've been here before in many regards. We also haven't in many regards. And so I think that's the part where a lot of people who are like Dan Ives, lifers in this industry are like, yes, we've seen this type of fall off, but no, not for the same reasons, and no, not because of a single solitary human being. And I think that's where it's a little,
Well,
it's dicey.
we've always had a sandbox we can work in on these kind of pullbacks. This is the first time we just don't at all because it caught everyone so off guard, and it's a game of hot potato
Yeah.
where you just don't know. So like, yeah, I mean, that's I think the market though, that's where irrationality can be factored into the market and why this dip could be a great opportunity for long-term investors because I think this is just me, but I think the vanity of Trump is too great for him to cause a recession. I just don't think I think his ego is just up,
Yeah.
well deserved. But it's just like there's no way he wants his face and name associated with a recession. Just it's not. So I think this is a negotiating ploy for sure. But the issue is how long. And
Yeah.
issue is even if the deal was made next week, there was structural damage that's been done that will take a long time to phase out again. Like this is not even if there's like negotiating new tariffs with all the affected parties, like it's not over. There's friction now, and it's going to last until midterms, which is over years away. So have the list ready, have that dry powder ready. It's going to be a really volatile year for sure.
Yeah, and also it's also an interesting time. Like just I'm putting on my like corporate marketing comms. Great time to drop some bad news if you're a company. Like I'm looking at like, are there any
Totally.
like, 10K? Like what are people gonna put out to sneak it by? I just saw. I don't know if they're trying to sneak this out, but Spirit Airlines CEO Ted Christie just stepped down. Not super surprising. They filed for bankruptcy in November. But that's the other thing. It's like, what are the things people are going to try to slip by while everyone's looking over here? Because that is always interesting to watch as well. And so, yeah, follow the 10Ks, follow the 8, follow everything that's being issued right now. Let's go into the comments. We have some people don't like that we're talking about the political side, which I guess I'll reiterate. Shy and I are pretty neutral on this show. So I think what's interesting, and I think which is why we're bringing it up, is because it is a very politically charged event, separate from other things. And I think I was watching Fox Business this morning. I was watching CNBC. This is, people are just they're asking questions. I think it's okay to ask questions. And even people who are all on board with the end goal are asking questions. How did you come up with that formula? Like, what's the next step here? What should we expect? Those are valid questions to ask. Doesn't mean we're pulling for one side or the other. We're just asking questions. Like, I think, if you're following these things, you have money in the market, informed citizen, you can ask questions. I think that's kind of what we're trying to do here. So I'm curious what you guys think in the chat, what questions you have, or if there's any like things you think we're missing. Frankly, as we talk through these things, we'd love to hear from you guys.
Also, like I think it's normal to even if you're a Trump supporter and you vote for Trump, I think it's a good thing to question policy. Don't blindly follow a party. Like don't be a sheep. Like I think sheep. Like think for yourself. Like you can believe in a party, but like question the specific policy. Like that's healthy. So right now, like I think I said again, this is not red. It's not blue. It's purely execution. I
Yeah.
I hate it. Nobody likes it. It's messy. It could have been done way better, and you could be part of the camp where like he had to do it this way to make an impact and force like the other countries to come sit at the table because they're unwilling to before. Sure, that might be true, but I think he caused a lot of American citizens a lot of pain in the immediate. That could be the straw that broke the camel's back. That maybe didn't have to, and that's what's alarming. Like, because I know people are going to be suffering, especially if you're an SMB. Like, if you get your stuff from
Yeah.
Canada or Mexico, like, what? How long can you last with this tariffs? Like, imagine you had an amazing momentum in starting a new company just in the past year. This occurs. Now, all of a sudden, 3 months of this, you have to file bankruptcy just because of some high stakes politics game. That's the unfortunate outcome of something that didn't really need to be done, maybe, and it could have been done with more delicacy. So brute force, and we don't know the implications of this yet. It's too soon. We're
Yeah.
going to know in 6 months, but we won't know now. And right now, it's scary, and Qs are just keep going lower and lower. It's see, capital isn't realigning. It's fleeing. It's just not wanting to be in any kind of asset market. What's crypto doing? Let's see what Bitcoin.
That was falling yesterday. I want to go back real quick, then go to crypto. The SMB point, I think is so valid because it gets the complexities of the supply chain. I think when we think buy American, we're like, oh, yeah, stop buying crap on Amazon from China. There's parts of things that we buy from there. Like, so I've worked with companies where it's assembled in the US. I mean, Apple's the prime example, but lots of startups, direct to consumer companies, their parts are coming from different places. It's assembled in the US. And they're like, yeah, we're made in America. That's going to mess up their entire supply chains.
Totally.
And I think I just anecdotally have a friend who works for a sneaker company, and she said their cost to import per pair of shoes was $280 before all this. It was going to go up to like almost $16. Then you got, okay, what do? You got to stay competitive. Got to figure out how to squeeze the margins. You're going to raise the price, or you're going to take the hit. You're going to lay people off. And I think that's a larger company, but even small companies that are buying pieces of what they're selling or certain products from these other countries, it's going to hit them really hard. And
Totally.
it's not just about, a big Chinese conglomerate selling a bunch of prepackaged things to Americans. It's all interwoven into the things we're already buying. It's like interconnected into the commerce. It's hard to separate those things. I think that's why, going back to the CEOs, like there's going to be a hit, and it's not just going to be on the people who hold stocks or the people who run those companies abroad. It's going to be on everyday people who are participating in the global economy as part of what they're selling. And I think that's the part it's hard to quantify that right now. So I'm glad you brought that up, Shay, because that's the thing I'm kind of looking at the most. Like, they have the charts up of how much billionaires have lost. It's like Elon lost 31, whatever. Like, I don't know if he sweats that even, but like, yeah, everyday people, they have a small business. Their families relying on it, and now what? I don't know. Let's
It's
flip
just
over to let's flip over to crypto though, because this is another one. I did want to ask you about this because crypto. Let's see what's going on right now with like Bitcoin. All right, yeah. Well, so this. What do you think of this with like what GameStop just did in strategy, Shy? How do those moves look now?
financial Hail Mary just was a little too late.
Yeah.
I gotta say, I think MicroStrategies might break Bitcoin if this continues. I don't know what their breaking point is. They probably might have communicated it externally, or they know internally. I can't imagine if this breaks 50, they're going to be solvent. Like I think they're gonna have to do some major liquidity events, which will be a risk towards Bitcoin price, which didn't have to be a risk. It just didn't, but now it is. And that's part A. Part B is like, wow, this has held so well. It really has. It has not even filled that election gap, post-election gap. A lot of like the assets that are like risk on, high quality ones are a 1 year low. this is not even filling in the last 6 months. There's strength in Bitcoin,
Hmm.
significant strength. And that's great to see if you're a Bitcoin shareholder. It's passing the gut check right now. It absolutely is. Or it might catch up. I don't know. That's the thing where if this does last months, not weeks, this could be the catch up trade on the downside. It really could be. Um, yeah, I don't know. I'm just really impressed with the relative strength. I think GameStop probably should have done that financial Hail Mary a year ago. Um, Probably honestly a couple years since the Momo of the meme started in
Hmm.
22. And yeah, I just
So say Shy, we get through this, and crypto continues on this path of being fairly durable, doing what it's supposed to be doing. Do you think other companies follow what strategy and GameStop did, which seemed like they stuck their necks out a bit? But now looking back in a few months, years, you think other companies are moving more and more money to Bitcoin as well as they see something like this happen?
totally. I think that's also like a catch 22 where it makes MicroStrategy's less special because other firms are now adopting their strategy because
Mm-hmm.
it's a low barrier of entry. Like, what are they doing that's special? They're clicking the buy button and then diluting shareholders in the meantime to buy more. And that's literally all it is. There's no intellectual property. There's no algorithm that's like patented. It's just simple as buying and selling and diluting.
Yeah.
So I do think it's going to like, would you rather file bankruptcy or do this Hail Mary? Clearly this Hail Mary because you just never know.
Mm-hmm.
And if they make you liquid enough, if Bitcoin goes to 250, 200, it might save you and then you can just sell it in a blink of an eye, fat cash position, you're healthy again. Now you have enough funds to do strategic initiatives, or you keep the Bitcoin on your balance sheet and you can use it as leverage for, I don't know, getting favorable rates on a loan or something. There's a lot of optionalities, but yeah, I think that is the norm. That's
Yeah.
going to be the norm.
It looks like flipping back over to what's happening now in the market, continuing to sell off. So we're down 1,300 points. Or, oh, 1,500 now? Am I reading that right? 1,500 points in the Dow, 200 points in the S&P. Nasdaq's down over 4%. What stops this today, Shy? Like how low do you think this goes?
That's the thing. When it breaks 200-day moving average, like that's when people lose their money. People lose their money at stage four. We're in a stage four breakdown. There's no like right now we're in full discovery mode.
Yep.
I think for QQQ, if you want to get specific, I've been saying the bottom for QQQ is going to be where is that number? Oh, 380 to 385. So that is how do I get that number? That put my finger in there. Like where's it blowing? No, it's the 50-month SMA level. That's always been historically a very strong bounce. We bounced there during like that full 2022 bubble bursting. That's where we bounced. So I think long term, like I could see us going there, and that's also where there's a massive volume shelf. So I think there's gonna be a lot of accumulation at 380 to 385. But the issue with that is that's an 8% more correction. Like that means at that point we're gonna be 30% off our highs. That's somewhat scary. So I think even if we bounce here, like the destruction's been made, like it's gonna take a long time to recover. It's gonna take a very long time. But
Yeah. Well,
there's
it's also
opportunities.
it's like I'm like looking at this live and like, oh my God, we're down for over 1,400. Then I'm an see our friend Ram Capital. He's saying, we're still like kind of like we're getting down there, but like we're at where we were in 2020 in 2024. So it's like when you do the zoom out, it's like okay, um, for like a long horizon investor like you, Shy, this is like okay, take a breath. But it is just wild, and every time, just like your mind just gets blown going between the toggles of time horizon. We are definitely erasing. I do think it's the math, right? Every time we go down a certain amount, it takes a little bit more to recover from that, and that happens a few times. But you had Dan Ives saying, like you started off the show, Shy, saying, we're in this industrial revolution. This is just setting things back. Dan Ives is saying this is setting us back 10 years potentially. That is
For sure. Yeah.
wild to me.
I mean, that's I mean, that's the pessimistic view. There is a lever. If customers are, I mean, if enterprises are really struggling, they're gonna be put in a corner to force to adopt AI tools. So that might maybe like instead of a luxury, it's like a necessity because like we have to lay off 20% of our FTE to make sense of these our numbers anymore. And in order to make up for that workload of the FTE loss, they're gonna be more willing to adopt AI tools. So that might be the half glass full, but I really don't think that's going to be the case, especially the EU rates. Like EU is our we for tech, it helps us a lot. It really does, and I think the implications of the EU tariffs on big tech is underplayed right now. It's massive. So that's why we're. Who's the first big tech name that always reports this earnings cycle? I'm blanking on it right
Netflix,
now.
maybe?
Is
Or is it-
isn't it might be
No, that's I
Netflix,
meant. I don't know if they're tech more so media, but
but that's another one. Like that's when we get some subscription behavior from consumers. Like
yeah. I mean,
I,
I'm interested to see when Coinbase and Robinhood, because volumes of crypto versus stocks, like that's going to be really interesting as well. And Robinhood, if we look at them, they were down almost 20% yesterday. Um,
yeah, I mean, I know
so
I know Robinhood doesn't do this as much as Coinbase, but they both weaponize volatility. They do. That's how they make the money, the spreads on volume.
yeah,
So the issue though is AUM historically has tracked with like GDP growth technically, or kind of like growth of like our nation. AUM growth on brokerages usually correlates with that. So if we're seeing like significant negative GDP growth, we're seeing unemployment ticking back up, like those are things that will eventually play out in AUM, but
yeah.
we don't know that yet. And wow, we're huge bounce on the market. What dropped? We just went up 2%. Something just
I'm like, somebody tweeted something.
oh,
Uh,
as soon as the SPY hit the bear market, it bounced. That's so
oh,
interesting.
interesting. Do you think so? That's actually, I was reading about the 1987 crash, and I was reading that part of the reason it spiraled so quickly is because that was the first time they were using like computer trading, and there was
Hmm.
some like automatic stuff just happening. Do you think something like that could be algorithm related? So, or just like an automated thing where it hits a certain thing and then people buy. Like, is that? Do you think that's possible right now, just with the amount of just automated trading systems that are there, or do you think that was more of like a psychological, like people saw it was getting there and they're like, okay, now I'm going in?
I think liquidity is everything, guys. It really is. So there's an for the doc 87, like trading became so much more accessible than I don't know, just like waiting the following day on the newspaper and seeing what happened and then making a move. It was very backwards looking. Back then, computers changed everything. So I think it's all about liquidity, liquidity, liquidity. I think now, right now, it's so easy to do trading, buying and selling that
Mm-hmm.
it's just going to create so much. Like I think this is all like I really do think institutions on the sideline, like that's crazy as it sounds, like there's this. I feel like retail is just doing a lot of the buying, and the volume today is wild. Let me see what SPY volume is. I looked at the 10-minute mark. So the average volume for SPY is supposed to be 61 million a day. We're at 40 million already in 30 minutes.
Oh wow.
So we're 75% there already of the average daily in the first 30 minutes. So I think today the volume is backing up this bounce, which is great to see. Amazon's about to go green, which is nuts. Um,
Wow.
and Axon's about
Let's
to go
look.
green as well. Ion Q is about to go green. Wow. And the Qs are still down like over 2%, 2.4%. So there is buying that's happening right now on select
I was
names.
thinking this morning, if like on a macro level, could retail investors basically do what they did with GameStop to literally like that stock market? Like if they pour enough in, could you start memeing this the other way? Is that's what's happening to some degree? I don't think it's the same apples to apples, but could you get a wave of retail like just being like, yeah, this is my time. Everyone else is selling out. I'm gonna get mine right now. Everyone doing it. And then like, is that sustainable? But is that part of what's happening perhaps?
Maybe that might be it. I don't know. I mean, we're so oversold, guys. Like, daily RSI, which is the tool I use to see if we're oversold or not. Anything below 30 is oversold. we're at 19 right now. So like last time we were this low on the daily chart, let me go on the weekly. Let's go on the weekly because weekly is a bigger time frame. Weekly, we're at a 25. The last time we were this low was March 2020, and that was at a 20, is when we bottomed out there. Before then, it has not happened in 20 years. That was the only time. So we're at the second lowest oversold nature in the weekly chart in the last 2 decades. So I do think that, let me see the monthlies for a second factor in the 08 crash. Oh wow, 08 was way worse. Never mind. That was much more oversold. But yeah, we're oversold. So I think we're gonna have a dead cat bounce. I think if you guys want to get levels specifically, I think we probably dead cat um to 440 on the Qs. So I think that right there is an 8% move, and then I think we get a new low. We revert back to a new low, and that new low is 385 to 390. So that's where I think it's gonna get gamed out. I'm still adding. Again, like I think we're gonna get lower. That's also a caveat. Like I keep getting this message, and like, I really want to add. Like I'm a different investor than a lot of people. I have cash coming into my portfolio every week, knowing if I add today and it goes lower, the stock I'm adding, that's fine because I'll have more cash coming in to add when it gets lower. That's my DCA plan. But if you have a fixed portfolio, which I know a lot of you guys have, you rate, I said weeks ago, raise 15 to 20%, put it in cash until it gets capitulatory or noise clears. This feels capitulatory. When the VIX hits a 60, that's capitulation. That's fear at near an all-time high. It's significant. That's when you add. And then you will get a bounce, and maybe when it bounces 8%, you raise that cash position because I think this earnings cycle will be ugly. It's not going to be nice at all. Best case scenario, it would be decent, and decent will get us to the finish line on having green months, but it's not going to be pretty at all. So that's my advice. Be cautious out there. This is not a great environment, but wow, like my portfolio is only down 1% right now. So things are going
Wow, Shy,
pretty
flex on
aggressively.
them. Flex
No,
on
I mean
them.
I'm down. I'm down like 15% for the year, I think.
We're gonna take a win's a win. I think there's a lot happening this week. We have earnings today from some like interesting pockets of the market that we've been watching. So I think Dave and Buster's, which not a stock everyone here is that invested in, but indicative of recreational spending. They're reporting after earnings. Levi's as well. So it's another retailer that has been historically doing pretty well. Is that another one? Are they going to issue guidance? Yes or no? What are they going to say on the call? I think the commentary of these calls is going to be really interesting, especially with some of the banking earnings later in the week. And I believe on Thursday, we're hearing from CarMax. So we're going to get these signals from different pockets of the market that'll be really interesting, all on the backdrop of, you know, there's phone calls happening, 50 countries apparently calling the White House. I feel like every day is going to be a new journey for us. So we hope to see you back here all week. We'll be here at 9 in the morning. Definitely follow Shy, Stocktwits, myself on X for the latest. Shy, any parting words of wisdom to kick off the week for our lovely viewers?
This dip is real. I'm looking at some trades. I think some positive news came from the EU that caused this actually bounce, and that was like the one thing I was referencing. Is like if the EU is gonna drag the big tech, so like I think that's what scared a lot of the QQQ pullback. If there's good news coming from the EU, that's substantial because I think China were underwriting. That's gonna be ugly, but EU was a surprise ally, bread and butter for us on their services. Like why rock that boat? So I think some positive news came out there. So this seems viable. Yeah, it's there's a velocity in this move now. I have 4 names that are green. Nvidia is about to go green. So yeah, real bounce here. Look for some trades.
All right. We'll see you all back here 9 a.m. tomorrow.